Why are housing prices and rent prices so high here in 2024? Is it inflation or is it something else? That's the question everyone's asking. Well, there's a housing story that no one's covering in the mainstream, and it's having a giant effect on housing prices and rents. And in fact, it started with some obscure sweetheart deal that was cut in 2012 under the Obama administration. This story is starting to go viral. So we got our man on the scene, Dave Gonigam. Dave is an Emmy award winning TV journalist, and Dave's got the story. Dave, can you get us caught up on this?
Yeah, absolutely. It is starting to go viral. It's gotten a little bit of attention in the last couple of years, but then it really popped with a story in the Daily Mail. Wall Street-backed landlord buys 264 Las Vegas homes in a $98 million deal, even though Sin City has the nation's worst housing shortage, as a study shows corporate sharks could own 40% of all U.S. homes by 2030. Okay, that's not quite accurate, but we'll come back to that. There is a big story going on here, which is
Yeah.
that you've got large corporate entities who are owning an increasing proportion of the housing stock in this country. It has happened slowly, inexorably for more than a decade now in a way that nobody has really been paying attention to. We've reached a point now where in 2021, one out of every four home sales was to professional investors. Excuse me, it was one out of five in 2021. It's up to one in four now. That's how much speed this whole trend is gathering. There was a fellow who was quoted by the Wall Street Journal in 2021. He said, "You have permanent capital competing with a young couple trying to buy a house. That's going to make housing permanently more expensive." This is a real estate consultant from California named John Burns. That's the situation that we're facing right now. The result of that, uh, here's an interesting chart. Between all the high prices and the high mortgage rates that we've had, in the past couple of years, housing affordability it's at its worst in 30 years. It's even worse than at the peak of the housing bubble in 2006. And this is figures from the National Association of Realtors. It's in the interest of the National Association of Realtors to say housing is affordable, everything's wonderful. Even they have to fess up at this point that we've got a real problem in this country. And
Yeah, and I think that's why we're hearing a lot from your readership and our readership at Paradigm because you're hearing this from either friends or daughters or sisters or brothers, and they're saying, "I want to buy a house, but guess what? I found this three-bedroom, and guess how much it is? It's 500 grand, and the mortgage is $5,000 a month." And all of a sudden, you're like, "For that house?" And it's happening everywhere. And then you say, "What are their alternatives?" They if they rent, it's just as high. So it's the story is very out there from person to person. But now, what I like what you're doing, it's starting to gain some steam. The story is going a little bit of viral. So like a lot of people really don't understand how the situation got this way. But you've been writing about it for over a decade because this started over a decade ago, and you've got a huge backstory that I think few people know. So get us caught up there.
yeah, there are a lot of factors that go into the housing shortage right now, but one of the major ones is something that we were almost first to the post on. Our firm was one of the first groups to ever write anything about it. This is from January 2012. The real estate steal of the century. Uncle Sam prepares to unload foreclosures galore. Minimum investment $1 billion, please. So here's the story. I noticed a Federal Reserve white paper in very early 2012, right around this time, 12 years ago, and it was setting up a program that's called REO to rental. Now it's got nothing to do with REO Speedwagon or anything like that. It's REO means real estate owned, and in this case, it meant specifically real estate owned by Fannie Mae or by Freddie Mac or by the Federal Housing Administration. One of those three government or government adjacent agencies. Now remember, the housing crisis, 2008 financial crisis, tons and tons of foreclosures all over the country, people losing their homes. What happened to those homes? Well, they ended up on the books of these federal or quasi-federal agencies, and well, they had to get rid of them somehow. So what were they going to do? They came up with the Federal Housing Finance Agency came up with this scheme called REO to rental. It was first laid out in a Federal Reserve white paper in January of 2012. And the idea was that they were going to sell these properties at fire sale prices to hedge funds and private equity types and other extremely well heeled and politically connected investment groups. And that's how they were going to get rid of them. Um, the key to this was that you had to have enough money to drop $1 billion on a bulk transaction, so that you could, only buy $1 billion worth of properties at one time. That was the price of entry. So remember what was going on at the time. You had all of these foreclosures. Neighborhoods in some cases were going to pot. Now imagine if you were at that time a middle class, upper middle class person, and you saw there was a property in your neighborhood that was a foreclosure, and you thought, gee, I might like to pick that up at a bargain price and rent it out to some responsible tenants and pull in some extra income. Because remember, this was a time, 2012. Interest rates were next to nothing. You couldn't get anything on a CD or a money market fund. So, how about buying this bargain price rental and pulling in some income that way? No, that was not available to you. This was only available to extremely well-connected, well-heeled investors, and that's where it sits.
Okay, so again, I'm just going to dumb it down for myself, but for anybody, like that's all sorts of foreclosures were on the market, and instead of allowing individuals to buy them, there was a sweetheart deal where it was like these big firms that have $1 billion minimum are buying them all. So all of a sudden, all these houses throughout America go onto the market, but no one can buy them except for these giant companies. And then I would have to assume, because that's why this story caught my eye, it's almost like the genie is out of the lamp at that point because you've messed up the free market. The mom and pop down the street can't buy this stuff. Um, but my next question is, amazingly, the story got worse during COVID lockdowns in 2020, right? How did that happen?
It did, and just I'll back up just a second. This happened so quickly. So by the time we got to the end of 2012, this program had been underway for less than 12 months at that point, and suddenly you had Blackstone Group, one of these major private equity outfits. They had bought 7.5% of all the properties in Sacramento County, California, that were priced under $200,000. Under $200,000, that's when that was still considered somewhat affordable property in California back then. 7.5% all snapped up by this one company. Blackstone was one of the major players in this regard. We'll talk about them in a little bit. But
Yeah.
yes, this did get substantially worse in during 2020, because what happened was you had a lot of smaller landlords back at that time. They were struggling because remember there was an eviction moratorium for
Mhm.
people who couldn't uh, you know renters who could not keep up their rent payments. There was an eviction moratorium that was issued by the Centers for Disease Control of all people. Ultimately, that was struck down in the Supreme Court. But in the meantime, that was a big deal because mom and pop owners still had a substantial amount of mom and pop real estate owners. They couldn't collect rents, and in many cases, that meant they couldn't pay their mortgage. And if those mortgages didn't have any foreclosure forbearance protection, and if they weren't, then they were out of luck. And there was the Paycheck Protection Program. Well, not for a mom and pop. Bloomberg had a
Mhm.
story in 2020 about owner of properties in Connecticut, and she had no employees. She literally loaded a lawnmower in the back of her Toyota Prius and took it from place to place. So those people got into a lot of trouble, and even if they could keep up the mortgage payments, maybe they couldn't keep up the property taxes, and so you had that many more properties falling into the hands of hedge funds, private equity, again, very powerful, politically connected entities, and
I think I want to come up with a term with it. So I've been thinking up like it's like dark landlords
Yes.
or something because it's like that's actually what this is. And if you just put like a table out, you go, okay, normally regular Americans or some, like more wealthy individuals would be like, oh, I'm going to have multiple rental properties or I'm going to have a unit or whatever. They wouldn't even fit in the dark landlord category.
No.
This is gigantic billion-dollar companies, huge investment banks, or property owners or whatever, and they're probably backed by government. They're tied in with Wall Street. These are probably not good actors. These are people that are trying to make money and not care about the American dream. So let's call them dark landlords.
Yeah.
And that list of dark landlords, they are acquiring more and more and more of the percentages of the percent of houses in the US. You said you did say in the one stat from the story that you let off with. It was like I think they said in Vegas. Let me see if I can pull up that quote again. It was something like 40% of homes by 2030 could be owned by this sort of dark landlord situation. Even if it's not that number, that is terrifying for someone. I own a house, so I'm lucky. Like for people that are out there that own a house, okay, you might be in good shape. But if you're trying to buy a house right now, with this sort of property grab that's happening that no one knew about since 2012. I mean, that's huge, huge story. Any other pieces that we need to put together there? Otherwise, I got other questions for you.
Well, just so we'll correct the record here. It's by 2030. The forecast is from MetLife, I believe, is that 40% of all uh, 40% of all home sales will be to these giant to these dark landlords, as you're calling them. Again, it was
Yeah.
only about 20% in 2021. It was already up to 25% as of last year. So that's a credible projection. The way things are
Yeah.
going.
And if they keep all those on the books, again, it's the big percentage, whatever that number breaks down to be. It's just more and more ownership of housing across the country is going onto this sort of dark landlord books. And most likely those rents are high, might not be affordable, and just sort of putting funneling a ton of scarcity just into the market because there aren't houses for sale and those guys are buying them.
Well, because I
Um,
mean, this is it's making the the proverbial American dream that much more unattainable. Because and if there's any number of factors that go into the general shortage of housing stock right now, but this is absolutely one of them, and it's something that very very few people are talking about. And I'm glad
yeah.
you're giving me the chance to put it out there today.
All right. Earlier, we were talking in the green room about investment implications for this. You said way back in 2012 that the easy money will have been made with REITs. But what does that actually look like from an investment standpoint? Or I guess just, tell me more about that.
Okay. Um, I mean, we forecast back in 2012 that in time, a lot of these hedge funds and private equity outfits would eventually turn their holdings into real estate investment trusts, REIT, single family home rental REITs. The first one came onto the market in 2014, Starwood Waypoint. But the big player in the market, we're coming back to Blackstone Group here, okay? The big player was a subsidiary of Blackstone Group called Invitation Homes. Invitation Homes went public in 2017. And if you look at their performance, their stock performance, it's no great shakes. Even if you account for dividends, you're not much. And depending on what your time frame was, you're no better, and in some cases worse than if you bought an S&P 500 index fund. And in the meantime, Invitation Homes' yield right now is about 3.25%. I think you can get a T bill for 5% today. So just from an investment standpoint, it doesn't look that attractive. So again, as I said, as we said more than a decade ago, the easy money will have already been made. The fat cats have already done their part. Then they float it out on the stock market and bring in everyday folks, and it's not a particularly great investment in many cases.
Yeah. Okay, so looking forward into the future, is there any hope for relief here? Because this seems like maybe not from an investment standpoint, but just from a American dream standpoint, where do we go from here? What's the hope for relief?
It's
What's the upside? Anything?
I wish I could bring you some good news about this today, but I'm not seeing it right now. Just for because we're talking about some outfits that have very deep pockets, and they got even deeper pockets after some of these companies went public. As a matter of fact, um, unless something happens to actually bring housing prices down and make those interest rates more manageable, because interest rates are not, they're not going to come. The days of refinancing at under 3% that we had in 2020 and 2021, those aren't coming back. Um,
Hmm.
so, and again, that was another factor that helped. That certainly helped. Cheap financing helped these dark landlords make a killing in the early pandemic years. There is, you do see people carping about it in Congress once in a while. Ro Hanna, the Democrat from California, I've seen him. There were a few others, mostly on the left side of the aisle. They talk about, this is a bad thing. I've not seen any concrete legislation that would put a rein on this in any way. I'm not sure what that kind of legislation would look like, and it's kind of disingenuous to watch these politicians complain about the phenomenon in the first place because it's the result of a government program going back to the Obama years that brought us to this situation in the first place. It's
Yeah.
real unfortunate to it's if it's not hypocrisy, it's an unawareness of this whole phenomenon that's been lurking out there for over a decade now, and it still isn't
Yeah.
talked about enough. And I'm glad you're doing our part to bring this topic a little bit more to the fore today.
Yeah, I think when you add all the pieces together and you count it up, you say, some people just see high prices everywhere. They're like, well, everything's high, so it makes sense that housing is high. But this is a one big underpinning point of housing prices that are possibly artificially high or maliciously high because these dark landlords are starting to grab them up and they're not letting go and they're keeping rents high or whatever it may be. So it's definitely a story that we want to keep our eye on here. So, Dave, that's probably everything we've got for today. Any last words on this? Anything else we need to know?
No, I think that covers most of the ground here. Again, I wish I had better news on this score. And again, um, there might have been a brief opportunity in 2020 with some of these single family REITs, but it didn't last long as far as what a retail investor can do. And you know, it's uh, it's grim stuff. We can only hope
Hmm.
that at some point something is going to happen in the housing market to either bring prices down or bring supply up. This isn't the only thing that is contributing to the housing shortage. I don't want to leave people with that impression. There's limited housing stock for any number of reasons, including this. But we've also got materials shortages, labor shortages. Both of those are outgrowths of the pandemic. Um, you've got a lot of zoning restrictions. You've got a lot of land use regulations. All of that is conspiring to keep the housing stock very, very limited right now. But it certainly
Yeah.
does not help at all that we've got these dark landlords who are acquiring all of these properties either quietly in the first few years and then very, very publicly after that. And it doesn't seem like anybody can really do anything about it.
Yeah. And I'm guessing, but if they're maliciously, artificially, whatever you want to call it, holding rents high, that is actively messing with the housing market because there's no option. You either have to buy a house at some alarmingly high rate or pay super high rent. If there was an option for rental that was a little bit lower, again, you can think of it like OPEC or something, right? If they're like sanctioning oil or doing this or that or whatever, controlling the supply of it, they can mess with prices. If there was more rental, people could just go to rentals right now, sit there for a while, and then the housing scarcity would probably alleviate itself. But even that, they're just stuck in these high rents. I don't know. The whole situation is bad. I'll wrap it up here because Dave, I appreciate you getting us caught up on this at Paradigm Press and what we're doing here. We want to get the story that no one's telling, and this is absolutely one of the ones that's hiding underneath a lot of the inflation headlines. Housing prices in general come back to this obscure sweetheart deal from 2012, and it's something that we're going to keep an eye on. So if you're watching at home, we appreciate you tuning in. Thanks so much. Go ahead, give us a like below, comment on this story. If you've heard anything, you've got any anecdotes from yourself or anything you've heard around town, let us know what you're seeing, boots on the ground, and give us a subscribe. We'll be back with any updates when we've got them. Thanks a lot, and we appreciate you tuning in. Thanks, Dave.